Hey guys, Mike here. So I got a jam-packed video for you, and I got something that should absolutely blow your mind. And if the person in the comments named Grey Wolf is watching this video, I know he's going to lose his mind because, like he said, he hates irrational markets. Well, I went back and found something today, and it blew my mind. So I was like, wow, because I look at these charts all the time, and it was mind-blowing. I'm going to show you how irrational a market can be, and we're going to get into that as well as this huge bet that's been placed. And trust me, people made millions yesterday. I know for a fact when you read the tape going through, is one guy made $7 million in like 30 minutes because he bought calls right before Jerome Powell spoke. All right. And I mean, it was crazy. I'm like, it's insane how these options players do it. These big whales that buy these huge amounts of options. And so we're going to go into that a bunch. I got a bunch of stuff in this video, okay? So I'm just going to go ahead and get right into this. And right now, the bulls are celebrating because they were able to hold the trend line. You know, I mean, it was basically roughly end up flat day, but they're still right there. And I'm telling you right now, when you look at this, and thank God we were joking in the Discord today, like, can we start cleaning up some charts here? It's like, I'm finally get rid of that gap right there because it finally did fill the gap. And, you know, if you look though, this still could have room to run just for the simple fact, you know, if you pull up the RSI, we're not overbought. You would think we are, but we are not. Okay, we are not overbought. You go back to the last bear market rally, we got overbought, right? And then boom, we tanked. The one before that, we were basically got right to where we're at right now. Okay, we didn't get overbought, but you know, you can see when it gets overbought, it turns, and we still got room to run. So I'll tell you right now, and also the people celebrating and dancing are the ones who's been buying the Dow this whole time, because the Dow is really the best performer. I mean, this thing right here is only down like what 6% on the year, I believe it is, or something like that. And you know, it's in what they call this megaphone, or whatever you want to call it, pattern. But you know, you can see it's bounced off it twice on the top, 4 times on the bottom. And so people think it's heading to the top right there, right? And if you have the 200, it's far surpassed the 200. So, you know, it's come back tested it, and moved on. And so it's moved out of that. So I have to widen this channel out. But, you know, if you look at it, I mean, if this thing continues to run, even if it gets up to there before it rejects off, I mean, that's going to be another like 4% right there, I believe. And understand, I went back to 2000, 2008, and I looked at these channels, you know, that we draw, and there was multiple occasions where the channel just had to be widened, right? Because you had a big run up or you had a big drop. And by the end of it, though, when you go back and look at the channel, it's going to be reconfigured, right? And so we're going to see if that's the case. But it happened multiple times throughout 2000 and 2008, up and down, okay? And the one thing I'm going to go ahead and blow your mind with this is, a lot of people are thinking, my God, how can the market rally? I don't get it. Inflation's still really high. And I'm going to show you some data it'll tell you, it'll make you really go, I don't understand what's going on, right? And, you know, because economic data, it isn't good. It isn't good. The only thing holding this whole house of cards up is employment right now. People have jobs, and they can run that debt up as much as they want. But I'm going to show you a stat I found today, and to me, it makes things look even worse, because people usually don't do this unless they're absolutely desperate. But you know, understand the market. You don't get these sayings in life without them somewhat being true, or for just for no reason, right? And so, what is the saying? The market can remain irrational longer than you can stay solvent. Is that the saying? I believe it is. And so, you know, when you look at what I'm about to show you, this is pre-internet, pre margin, or you know, all the leverage we use today, pre-FOMOing retail investors getting in on this stuff. You know, pre-options running the market, because the options rule the market now. It dictates where we're going, okay? And pre-market makers doing what they do versus what they did in this time frame. And this goes back to the 70s. And I want you to see how much a market can move up when inflation and rates are roaring. And just look at this right here. I got this lined up for you. On the left is inflation. You can see it's skyrocketing, okay? Much higher in the 70s than it was now, just because of the way they calculate it, right? In the middle is the S&P 500, as you can see. To the right is the Fed's fund rate, and that was when Volcker was in charge. So he raised those things sky high. And if you look, this exact same time range right here. You look at the years in the bottom there. I got these charts lined up perfectly. And look at that run right there. That thing, the S&P went up 63% in 3 years. And look at that. You can't deny that happened. That's what happened, okay? And understand, was it a smooth ride? Here's the ride right here. Starts right there, September 78. You can see some massive, I'm sorry, it actually started in April 78, and you can see some massive drops along the way. 12%, 10%, what is that, 22% drop. We're in a recession right there. And then here comes another big rally up. So you can see, and then of course after that we go into another recession going into 82. So you can see, wasn't a smooth ride up, but what happened? Major rallies along the way. No denying inflation skyrocketing, Fed funds rate skyrocketing, and that was before all this crap we have nowadays, right? That was just the institutions doing really the investing because they didn't really exist for us, right? No internet, none of this stuff we have nowadays. I don't know when margin started. I don't even know when options started. I haven't looked into the history of that because that's before my time. But look into it if you want. But I'm pretty sure it's not like it is nowadays. And so, yes, a market can absolutely be irrational. What's going on in the economy? Remember, they're trying to think ahead. They're trying to get ahead of it. And also remember, it's not their money. It's your money, our money. We're the ones putting in the 401ks, IRAs, giving Vanguard our money and Goldman Sachs and everybody else our money. And if they lose it, not their money, whatever. It don't matter, okay? So that's what you got to remember as well. And so think about that. Let me know what you think about that in the comments, by the way, because it really surprised me when I saw it. I was like, God almighty, really? At that big a return when that was happening? Sure did, right? And that's back when most people, like only one person in the household worked, right? And one person stayed home with the kids, and middle class was, one car, 3-bedroom house maybe in a subdivision, kids going to normal schools, that kind of stuff. That's what that was back then. That was the 70s, at least the way it was described to me. And another thing to look at too is this right here is awesome. It came out today from our friend Charlie, and it says performance of 3 strategies used this year. Buying the S&P 500, pay attention to this closely now. When the VIX closes above 30, sell when the VIX closes below 20, 30% return this year. I know a lot of people have done this. B, buy and hold S&P 500, negative 13%. C, buy S&P 500 when VIX closes below 20, sell when VIX closes above 30, minus 33%. And he said this yesterday, the VIX closed at 20, but guess what, guys? The VIX closed below 20 today. All right, it's back in this range we hadn't seen since really, what is that, August, and then you go back to April. So, we're heading down to between like the 17, 18 range, maybe the 16 range or below. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. But obviously that has performed very well because then when the VIX gets really low and it spikes up, obviously the S&P drops, right? And so then when it gets above 30, you want to go ahead and do the opposite because the VIX is fixing to drop, which means the market's about to go up. And so, that's what's been happening. And so I found that interesting. Let me know in the comments if that's what you've been doing or you plan on trying to do that. I can't wait to see what people are doing because the VIX it just keeps dropping, right? The S&P ended up going down today. It still goes down too. Right. And it's funny because I talked to you guys yesterday, you got to pay attention. You got to find what bears you like to pay attention to. I understand when it comes to long term, I'm going to get into this in a minute. When it comes to long term, no, I'm not bullish for 2023. I mean, you got to be crazy with the economic data out there to be bullish for 2023, the beginning, that is, first 6 months, right? Because the economic data is not good. I'm going to show you a little bit here in a minute. We had a lot drop today. But in the short term, trends change, right? The short-term trend still is bullish at this moment. Like I said, that trend line I got on the S&P still has not broke down. It's still sitting right there at resistance, right? The bulls and bears are still fighting it out, okay? And it's funny because I mentioned Dan Niles yesterday, and people were just like, oh my God, everybody's turning bullish. And he came out with a tweet today saying, look, long-term, no. I mean, as far as like 2023, no, right? Earnings contractions, all this stuff is still taking place. But in the short term, you have to kind of go with the flow. And what did he say yesterday? I said he's buying e-commerce and he's buying emerging markets, right? That was two of the things. And he's doing oil and stuff like that. Well, what popped today? Oil popped today. I don't know if it stayed up. But also e-commerce. You got Etsy, Coupang, Shopify, and they're up today, right? And then for those who don't get into it, because I really am getting more into this myself, emerging markets. Look at them compared to us, right? Month to date, you see the numbers, and then you can even go quarter to date. Look at those numbers. They are fantastic. Then you get down to the United States. We're at the very bottom of the list with Israel, okay? So where do you get more bang for your buck? And this is why people are putting money into these markets because they're ahead of us in the business cycle. That's why, the economic cycle, whatever you want to go with. And so you can see that's what's been happening. That's where big money's been going. And you can see it plain as day. That's what's been happening and the reason why, okay? because they are already ahead of us and all this contraction and stuff like that. And so I just want to point that out, but I did want to go into this real quick with you. And this is data that came out today from Vanguard. And you can see this talks about 401ks, guys. And you know, to me, you got to be hard up to take a withdrawal, a hardship withdrawal or loan on your 401k. But right now, it's up. And you can see right here, plain as day, you compare that and go all the way back to January 2004, this is the highest it's been. And so I don't know why they're taking these hardship loans. Guess they need the money, because to me, that'd be the last thing you would do. Then you look at manufacturing, down to 49, which is contraction territory. Came in worse than estimates thought, right? New orders dropped to 47.2. Like, all this stuff is dropping when it comes to manufacturing. And there was a lot of other stuff came out. You know, the jobs report ended up coming out as far as like how many people are filing, things like that. That kind of came in line. The PCE came in pretty much in line. So I was surprised the market didn't completely skyrocket after that. It kind of surprised me a little bit, right? Because it was the other inflation data came out, man, it just took off. On this one, it was like, okay. Even though it was in line, month over month was actually a little bit lower, right? And so that leads me into this bet right here. And this is a big bet, and you kind of wish I had this much money. But a trader makes a $36 million options bet on year-end stock rally, okay? And this option bet right here, you can see this is what he's looking at. He's saying it's going to reach around 41.75 by year-end, which would be a nice move up, right? Break that trend line, everything. We'll draw the trend line right in here for you so you can see it. So that'll have us breaking the trend line, going right above it. A lot of people are saying we're not in a new bull market if you don't go above 41.50, right? So 41.75 will put you there. And to go a little more detail here, what he did was he purchased roughly 20,000 calls that are linked to the S&P 500 and expire on December 30th with a strike price of 41.75. As the benchmark index jumped 3.1% to close at 40.80, the contract that cost $20 a piece ended up at 50.45 for a potential gain of 152%. And so, again, I don't know if that's a person or whoever bought this stuff, an institution, whatever, but I mean, just in one day, you see what happened right there. You see how this works with the options running the market. I mean, that's a huge bet and already a huge gain. I don't know if they're going to hold on. Who knows, right? Because if the market does end up going up to where they think it's going to go up, wow. I mean, those calls are going to be worth something, aren't they? I mean, that's amazing. But just on one day, you see right there, already doubled the money. I mean, isn't that amazing how that works? This is crazy. And so, yeah, I mean, this is big money runs it, right? I mean, that's the thing. That's what blew me away about the 70s, seeing the market go up like it did in the face of inflation and Fed funds rates being higher than we've ever seen them, even to this day, right? And so don't think the market can't stay irrational and all that. And, you know, also understand starting Saturday, this isn't bullish or anything else, but really starting Saturday through the 15th, Fed presidents can't speak anymore. So they can't come out and try to, you know, beat down the rally if it continues. Can't do it. And so I went back and looked. It's not bearish or bullish when they don't speak, but when you're in a rally, it does help to not have people out there trying to spook you, right, and scare you to death about the Fed funds rate and all that stuff. Okay, and you've seen the market move off these Fed presidents talking, right? Just saw one yesterday. And so, you know, just to put that out there. But yeah, let me know what you think in the comments. I mean, I tried to jam as much as I could in this video because I had a lot to say. But anyway, I hope you got some out of it. Hit the like and subscribe button. Always appreciate it, guys. And I'll see you tomorrow.